posted by NGX Regulation. And I am your compere for today. My name is Wale Famrewa. I'm delighted to be here. And today we gather virtually to explore a critical topic, expanding reach for more impact, deepening financial inclusion in the retail investor ecosystem. That is the theme of today's event. And in an ever-evolving financial landscape, it's essential, I think, for us to collectively delve into the possibilities that enhance participation in the capital market and promotes the growth of retail investors through financial inclusion. So our discussion today will involve a comprehensive examination, hopefully, of the current financial landscape, the identification of challenges, and the presentation of innovative solutions to enhance market participation and also to expand access for retail investors. So as part of our agenda today, NGX Regulation has organized what I believe should be a very insightful panel conversation. We'll be delving into retail investing in Nigeria's capital market. We've assembled a distinguished group of panelists, experts, all committed to expanding financial inclusion and deepening impact. So I think with that background, let's get started. Before we do, though, I just want to let you know that it is designed as an interactive session. So we look forward to having your feedback, and please use the Q&A field when you are typing in your questions and comments. And on that note, I'd like to now invite the Executive Director, Capital Markets at the NGX, Mr. Jude Chiemeka, to deliver his welcome address. It's over to you, Jude.
Thank you, Wally. Good morning, distinguished ladies and gentlemen. I welcome you all to this all-important retail investor webinar themed Expanding Reach for More Impact, Deepening Financial Inclusion in the Retail Investor.
Right, I think we may have lost Jude. Okay, Jude, we lost you for a moment there. Please, maybe you could just start again.
All right, thank you. Good morning, distinguished ladies and gentlemen. I welcome you all to this all-important retail investor webinar themed Expanding Reach for More Impact, Deepening Financial Inclusion in the Retail Investor Ecosystem. This is the third in the series of webinars this year hosted by the Nigerian Exchange Group of Companies and targeted at the retail mass market, as we believe that there are huge untapped potential among this segment of investors. Today's workshop, organized by the NGX Regulation Limited, NGX Reco, and supported by Nigerian Exchange Limited, NGX, focuses on enhancing financial inclusion within the retail investor community. In simple terms, financial inclusion means bringing people who are currently deprived of financial services into the financial system. These services include access to credits, housing finance, agricultural finance, savings, insurance, payments, remittances, and Islamic finance. This access and use of such services for economic activities will then lead to improved standard of living. In today's rapidly changing financial landscape, it is essential that we foster an environment that provides everyone with equal opportunity to participate fully in the capital market if Nigeria is to fully fulfill a 95% financial inclusion target by the end of 2024. According to Central Bank of Nigeria report, financial inclusion rates in Nigeria currently stands at 64%, which is below the 70% target set for 2023. Financial inclusion goes beyond mere access to financial services. It encompasses creating an ecosystem that empowers individuals, regardless of their background or circumstances, to make informed investment decisions and build a solid foundation for their financial future. At NGX, we believe that by deepening financial inclusion, we can unlock the true potential of retail investors and ensure that they have the tools, knowledge, and support necessary to achieve their financial goals. Achieving this portends immense benefits to the Nigerian economy, considering the access to financial services by a significant number of any country's population would help to accelerate the pace of growth and development. It's important to take a moment to acknowledge the remarkable growth of retail investors in the Nigerian capital market in recent years. Notably, retail participation in the equities market increased from 28% in 2022 to 35% as at September 2023, according to the NGX market report. Democratization of investing, fueled by technological advancements and increased access to financial information, has played a pivotal role in this rise. Retail investors now have greater access to investment opportunities through user-friendly investment platforms and mobile apps such as Xmobile. This made access to information on capital markets much easier for retail investors. This shift has not only transformed the dynamics of the financial industry, but has also presented new frontiers of opportunities for all stakeholders involved. While the growth of retail investors is promising, it is crucial to ensure that this expansion is accompanied by efforts to further deepen the capital market through innovative products. However, despite the positive trend, according to KPMG report, more than 1 in 3 Nigerian adults are financially excluded with no access to affordable financial services. Of the 69.7% adult Nigerians in rural areas, 44% are exempted from the financial system, while 16% access finance through informal channels. As part of its mandate, NGX Group is focused on creating an ecosystem that not only pools diverse participants, but also provides them with the necessary support, education, and products to make informed investment decisions and boost their participation in the Nigerian capital market. By doing so, we believe we'll empower individuals from all walks of life to build sustainable wealth and secure their financial future. Throughout the course of today's workshop, we will have the privilege of listening to industry experts and thought leaders who will share valuable insights, experiences, and actionable strategies on how retail investors can take advantage of products, technology, and regulation in safeguarding and building enduring wealth. They will also explore innovative approaches, technologies, and collaborations that can bridge the gaps and remove the barriers that prevent retail investors from fully participating in the capital markets. NGX Reco and the NGX Group, by extension, do no doubt remains committed to promoting just and equitable principles of trade and sound business practices in the Nigerian capital market by strictly enforcing listing and trading rules in accordance with global best practices. We will continue our collaboration with all market stakeholders for the collective growth and development of the capital market in Nigeria and by extension Africa at large. Finally, I would like to thank the management of NGX Reco for putting together this workshop. As we both collaborate to further drive our shared objective of financial inclusion. Once again, I welcome all our guests to this retail investor event, and I encourage all participants to actively engage in the discussions and share their own experiences and ideas. Thank you very much. Wale, over to you.
Thank you very much, Jude, for setting the tone, and we're delighted to see how NGX Redco have come together to continue to move forward the participation of retail investors. And as also been pointed out in the theme, the whole idea is deepening financial inclusion. So we look forward to more progress there. As we proceed now, I'd like to invite to deliver some good remarks. We're delighted to have the SEC join us today. And joining us to deliver that is Mr. Tunde Kamali. He is the Director of Market Development at the SEC Nigeria. Thank you so much for joining us, sir. It's over to you for your goodwill remarks.
Thank you very much, Wale, and good morning, everyone. I'm very delighted to be here this morning, but it is a greater delight to have the responsibility to convey the best wishes of the Director General of the Securities and Exchange Commission, Mr. Lamido Yuguda. The Commission highly commends the efforts of NGX Redco in setting up this webinar and would encourage all stakeholders to continually seek ways to contribute to the collective responsibility of ensuring that every Nigerian gets included in the net and is served with the appropriate financial services. It is without doubt that issues of financial inclusion are very dear to the Commission, as its implications for wealth creation and economic development cannot in any way be overemphasized. It is worthy to note that while financial literacy the world over is not as widespread as usually thought, with only 1 in 3 adults being financially literate, according to the Global Financial Literacy Excellence Center, the financial markets have become increasingly sophisticated and riskier. Hence, it is now more instructive for everyone to possess a relatively good financial knowledge to make safe and well-informed investment decisions. However, there seems to be a constantly disproportionate financial literacy demographics across the globe. Research has shown that in most developing economies, women are less financially literate than men. For instance, in Nigeria, according to Access to Financial Services in Nigeria, EFINA, the state of financial exclusion stands at 36% for women and 24% for men. Yet, in order to mobilize savings for investments, a good public understanding and effective participation in the financial markets would be critical success factors, and this is where the importance of financial inclusion lies. Financial inclusion, in addition to being a major plan for financial markets, has also been identified as a primary enabler of poverty reduction and general economic prosperity. According to the World Bank, it is expected to enable 7 of the 17 Sustainable Development Goals, and this has been reaffirmed by the commitment of the G20 to implementing its high-level principles for digital financial inclusion. However, it is heartwarming to note that while the situation may not be where it is expected to be, the world seems to have performed well in this area, notwithstanding the fact that more still requires to be done. According to the 2021 edition of Global Finance, the Global Financial Inclusion Database of the World Bank, there had been significant progress in financial inclusion over the preceding decade. As at the date of issue, the publication reported that over 76% of the world population had access to a bank account or mobile money provider, up from 51% in 2011. With 71% of the adult population of developing economies, such as Nigeria, having an account, representing a 30% increase in over the preceding decade. Sadly, while financial inclusion in Africa has seemingly advanced substantially in recent years, with sub-Saharan Africa leading the world in mobile money adoption, the region performed the least in the area of overall account access. Data from Global Finance reveals that 33% of adults in the region had a mobile money account, compared to just 10% globally. But only 55% of adults own an account with a financial institution or mobile money provider, compared to the 71% average for developing economies. In Nigeria, just about half of Nigerian adults were financially included as of the year 2020. Once again, according to EFINA, in a 2020 survey, only 51% of Nigerian adults had access to formal financial services, up from 49% in 2018. The report further notes that although financial inclusion had grown in the past decade, Nigeria fell short of the National Financial Inclusion Strategy target for 2020. While it would aim to reach 70% of Nigerians with formal financial services by 2020, only 51% was achieved. As one of its mandates, the SEC has responsibilities to boost financial literacy and inclusion, and has over time initiated efforts towards this. The revised Capital Market Master Plan places a very important focus on the need to enhance financial inclusion, and its recommended initiatives continue to be implemented in collaboration with the market. Some of our other efforts in this regard include enlightenment outreaches, especially around collective investment schemes and Ponzi schemes, and collaborations with stakeholders such as the Fund Managers Association of Nigeria, the Central Bank of Nigeria, and others. It is noteworthy that on the 31st of October this year, the Commission joined the CBN and the rest of the world to commemorate the 2023 World Savings Day, which is a day annually commemorated to enlighten the public and promote financial inclusion. We also, in addition to all this, host target webinars just like the one we're having this morning, and we are a leading partner in the implementation of a national financial inclusion strategy. From the scenario painted in the foregoing, it is apparent that though there's no perfect situation anywhere in the world, sub-Saharan Africa, and indeed Nigeria, require to put in more efforts than some other parts of the world if the country is to achieve its desired targets. As a critical stakeholder in the area of discuss, the Securities and Exchange Commission supports initiatives such as this, as they go a long way to support the financial deepening aspirations of the revised Capital Market Master Plan. And as we continue to expend all the necessary energies at our disposal, we remain committed, like ever, to collaborate with other stakeholders to improve the narrative, and more importantly, bring about improved financial literacy and participation, and indeed, enhance economic prosperity for the people. Once again, ladies and gentlemen, at this point, please accept again the best wishes of the Securities and Exchange Commission for a successful and productive session. Thank you very much for listening. Thank you.
Thank you very much, Mr. Kamali, for that goodwill message. I think it's very well received by participants and the broader capital markets today. Now we want to get right into the meat of the matter as we take our first presentation today, and that will be delivered by Mr. Kazim Alimi, Head of Secondary Markets at NGX. He will be presenting on enhancing retail investor participation in the capital market. We look forward to learning. It's over to you, Kazim.
All right. Thank you very much, Wale. Thank you very much. Hello. So with regards to our performance, our presentation on retail investors, we're going to be looking through how we have moved in terms of retail investors' participation in the market over time, and then also to with regards to the effort that's been made by the NGX essentially, and then also to the range of products as well as partnership and collaborations. And then at the same time also we'll be calling investors to move to action and take advantage of the opportunities in the market. Without further ado, I would just want to go straight into the presentation. So essentially, we have a predefined definition for retail investors. Essentially, retail investors are just primarily investors that invest in securities all across the different asset classes, equities, fixed income, and other alternatives like derivatives as well too. So one of the key benefits or importance of having retail investors in the market essentially is to increase the volumes of trade. So essentially, when you have retail investors in the market, what you have is improvement in liquidity. Essentially, more trades occur on the market. And then at the same time also you see that translate into price discoveries significantly, where you have investors more or less vote with their ability to invest across. So essentially, some have used the term democratization of the market. Essentially, is by bringing the retail investors into the market. It also essentially contributes significantly to capital formation in the economy itself. So, and as you know, all economies across the globe, all economies essentially require one form or the other of capital formation locally, especially when it comes to the retail investors, local investments. So essentially, you have this opportunity to be able to contribute to economic growth for every economy. So it's very important to put into consideration the fact that retail investors are significant as a group of players in the market, essentially. And also, too, if you look at the trajectory so far, we've actually come a very long way, and relatively also to there's been a significant improvement in terms of retail investors when you compare to what is obtainable in other markets across. I mean, more or less, retail investor participation has more or less practically doubled in the last 6 years, as it were. If you look at it from 2017, more than doubled essentially. We used to be about 50% in terms of retail investment participation in the market, and right now is in excess of 30%, as earlier alluded to by the executive director. And when you compare this relatively to other players within with other markets across, you would see that retail investors' participation in the Nigerian markets is quite significant, and you see that we are actually making a significant headway. I mean, South Africa, for instance, in Joburg, you have just about 10% retail investor participation, and they still intend to push that higher. So relatively, when you look at that with our market, then you see that there's been significant progress. I mean, of course, more can be done. I mean, like, for instance, in the UK, just have about 42% retail investment participation in terms of their contribution to the market. So the idea is that we still have more runway ahead of us, and we intend to continue to drive that going forward. So the effort essentially that and the initiative we put in place as an exchange essentially is to improve on education via workshops like this, and then also webinars, as it were, and podcasts essentially. So the idea is to push a lot of education out there, and we have a lot of things for retail investors to actually benefit from. If you go to our website, you have a couple of things around that will help retail investors. Also to product development. So we put in a lot of products. We've been developing products, and I think that's been a very key part of our moves or our initiative, essentially as an exchange. Developing products, essentially products that would more or less deepen the market, and then also we do a couple of investor roadshows all across to meet institutional investors to more or less educate them on the opportunities available and how they can create more products also for retail investors essentially. So that's a key benefit of that. And then also to regulatory oversight, we have our own as a self-regulation organization, so we have that that role to ensure that we continue to boost investors' confidence in the market. That's very key. And I think so far, I mean, investors have voted with their financials and with their investments, essentially, with what we saw in the previous slide. It shows the increment in their contribution to the market. I mean, retail investors. So where it has more than doubled. So that essentially more or less shows that investor confidence is increasing, and it will continue to increase. Essentially, and our own role is to ensure that that continues. And then we'll be having partnership with retail, with trading license holders and other fintechs that have come up, given the age of more technology involvement. So we've had a couple of partnerships around that with some of the corporates as well, to just push more retail investment. In terms of the range of products, all our products on the exchange cut across equities, fixed income, ETFs, derivatives, essentially. So we have a couple of products around that we ensure that investment that creates that opportunity for retail investors to benefit from across the different asset classes. In terms of collaboration, also too, we have a lot of collaborations that we've been having, partnerships, both with local organizations, as well as also to international organizations. So different trading license holders and other capital market actors, essentially, and the regulators as well, to having good relationships with them, and their collaborations as well, to just so we can deepen the market and improve the market. Essentially, that's the primary aim of that. And that has been something that we've been actively involved in. So as we're creating products, so it's not just an ecosystem of just the NGX alone, but where we also involve all the other stakeholders and all the other players across the market, so that when the product comes to the market, it can be easily accepted, and then also to the knowledge can be rich at the time the product comes into the market, and then the retail investors can take advantage of that. One other very key product I think I wouldn't want to miss out, essentially, is this African exchange linkage project, which is one very, very important collaboration that we're having with other exchanges across Africa, to more or less bring other markets to integrate other markets into our own market, essentially, and where where investors can be able to invest across different assets. And then we've seen this actually work significantly in a positive way offshore. I mean, in the EU, in the Eurozone, really, as an example. So we've seen a lot of activities there in terms of volumes of trade, and also to ability for investors to be able to move resources across. And we expect that would also filter through here, and we'll see a lot of benefits in terms of making the local investors also to benefit from that. So essentially, in terms of the cardinal points that we focus on, I mean, I could summarize into three, really. So access, education, and trust. So I mean, a lot of these things I've already mentioned earlier, but at the same time, I think we can't overemphasize them. So access, very key to the market. So for investors to have access to it, and that's essentially something that is of paramount interest to us, and essentially explains why we've been having a couple of collaborations across the fintechs and also to other investors, other stakeholders as well too. Then education, very key, as I said, webinars like this, and then also to podcasts and also workshops. We are having a couple of them already. We've had a couple of them in the year, and then also we still have a couple of them before the year runs out, essentially to drive that education, to drive that understanding to the retail investors, and let them understand what needs to be learned across the different asset classes, and also the opportunities available in the market. Trust is essentially very, very paramount for us. I think without doubt, trust is more or less like the foundation. Without trust, no market will survive, and we to a large extent promotes that, and I think also the result of all these things are already evident to a large extent, where we've seen significant improvement in terms of retail participation in the market. Of course, we're not resting on our laws. Our idea is to continue to drive and to continue to intensify efforts to ensure that yes, this trust is not lost in the market, and this is more of it is being built in the market. And so lastly, very important part of it, we are calling attention of retail investors to the market. They can take advantage of the opportunities in the market, especially when you have situations like economic challenges that the country is currently going through. The capital market can be a very, very good opportunity, a good source to improve the conditions of investors and for investors to be able to take advantage. I mean, for instance, one of the key benefits of one of the asset classes, which is equity, for instance, is that it's an edge against inflation to a large extent, because a lot of the price increases and the likes and all that from corporates, which those corporates are listed on the NGX, and their earnings will increase over time, and essentially you see the benefit of that. So naturally, equities are usually quite positive whenever you have inflationary environment and the type that we are currently going through. So essentially, it provides the opportunity for investors to be able to preserve their assets rather than even going into foreign exchange and the likes. So there's a lot of protection available in the markets where you can hedge a lot of your risk, essentially. At the same time, also to participating in the equity market, also or in the capital market as a whole itself, could also improve the status of investors, because long-term investment, I mean, time and time it has shown that investing over the long term and then also to intensifying those investment positions can always improve your status and then move you from the middle class to the higher class, or even from the lower class to the middle class, and then there on higher. So we're calling retail investors' attention to all this, and then also to take advantage of all the opportunities available. We will continue to be by their ears to continue to inform them of the opportunities, and we'll continue to put more effort in to drive that home. And we're hopeful that investors will be able to take advantage of this going forward. Thank you very much. And I yield to Wally. Thank you.
Thank you very much, Kazim, for that insightful presentation. No doubt we're making progress, but a lot more still needs to be done. And that is why we are having this engagement today. Thank you again for the insights. Again, I want to remind our audience that you should please send in your questions and comments. Later on, we'll be taking your feedback and, of course, posing your questions to our speakers and panelists. But at this time, I'd like us to now move on to our next presentation. At this time, we're going to be really enlightening the retail investor about the impact of something that has been part of the culture, if you like, in the capital market, and that is the issue of unclaimed dividends. And today we're going to be discussing the impact of unclaimed dividends on your investment portfolios. And joining us for that is the CEO of Maritime Securities, Mr. Saeed Adewale Bashir. He will be making that presentation, and I will yield the stage to him now. It's over to you, Saeed.
Yeah, thank you, Wale. Good morning, everyone, and thank you for having me. I'll be taking us through the impact of unclaimed dividends on your investment portfolio, most especially in the Nigerian capital market. I'll be taking us through, what is the importance of regular dividend claim? Why is it important for you to ensure that you have your dividends as and when due, when the company declares the dividend? Of course, if you don't do so, what does that portend for your investment? And what kind of a disadvantage you are put at? And of course, who are the parties? If you do have unclaimed dividends, who are the parties involved, and how do you claim such dividends? And of course, I will also be touching on the possible reasons why we have unclaimed dividends in the market, and how do you go about redeeming your dividends such that you have your money in the pocket. You don't leave any money on the table, as we always say. Yeah, I will take us through from the records in the market. Data from the Security and Exchange Commission shows that over the period up till now, close to 190 billion naira is a dividend outstanding or unclaimed dividend that investors are yet to claim from various companies quoted on the exchange. This is quite staggering. You could see the progression from 2019 to date. And the Security and Exchange Commission, SEC, the apex regulatory body in the market, has engaged, has put in place a lot of measures, and of course, investors' education, even committed resources to ensure that the menace of unclaimed dividend SEC puts an end to the menace of unclaimed dividend. And you could see the growth in terms of unclaimed dividend from 2019 to date, 158 billion in 2019, and up to now, we have about 190 billion as we speak. And this is quite staggering. And a lot of effort has gone into ensuring that this figure reduces, but yet we are still where we are, even though a lot of progress, I must say, has been made in the last 5 years or thereabouts when SEC started this journey. And of course, SEC has also put in place a mechanism to ensure that going forward, companies quoted on the exchange, when they do declare dividend, there is going to be a physical warrant again up until, from 2016, and SEC continued to provide some flexibility. The first announcement was made in 2016 that going forward, quoted companies would stop printing physical warrants, and there will be electronic crediting of investors when companies do declare dividend. That deadline, because of pressures and other to accommodate more investors to comply, was shifted to 2017, 2018, and up to 2019 years. But of course, as we speak now, there's no more physical warrant in the market. All investors in the capital market, companies quoted on the exchange, what they do now is that they credit all investors dividend accrued when such dividends are declared. You are credited automatically into your bank account, except for those who do not have their details, bank details with respective registrars. And of course, in addition to that, SEC also created a portal to provide a portal where investors who have not claimed their dividend, they can go there and search whether they have unclaimed dividend. All these are geared towards ensuring that the incidence of unclaimed dividend is reduced to the barest minimum in the market. And when you are talking about unclaimed dividend, what does it mean? To go very granular and explain this to us. And I'll first of all say, what is dividend? As we all know, when companies do make profits, and at the end of the year, they do declare dividend. Dividend is a share of profits from company at the end of the year. Sometimes companies do declare what we call interim dividend, meaning that before the end of their financial year, companies decide to pay part of the profit made to their investors. This happens every now and then. And we have some companies that are known for this corporate culture. Every year, before the end of their financial year, they will declare what we call interim dividend. And upon the approval and conclusion of their audits and approval of their audited accounts, they do declare the final dividend. And sometimes as well, we do have companies that declare what we call special dividend. Maybe the company is quite profitable, or they have some special, the business was quite profitable, and they made good returns or good profit in a particular year. They may want to pay back such money to investors by the way of what we call special dividend. So dividend can be interim dividend, it can be final dividend, it can be special dividend. This is referring to cash dividend, all in all. Of course, as I said, interim dividend usually is paid within the financial year, while the final dividends are paid at the end of the financial year. And of course, what is unclaimed dividend? Unclaimed dividend refers to dividend that is paid by a quoted company, by a company listed on the exchange, but not yet claimed by the shareholder. 6 months after the dividend is paid after the payment date as announced by the company. Then taking us through the importance of unclaimed dividend in the market or to an investor, I'll take us through what we stand to gain or otherwise lose when we have unclaimed dividend. As we all know, when you claim your dividend, when you get your dividend, when it is paid by the company, it provides some cash flow for you as an investor. And that is also, of course, the financial gain to you in the immediate. And that also helps you to sustain your capital, your investment portfolio as an investor. So because part of the reward to you as an investor is that a company is profitable and they declare their dividend, they declare part of the profit made to you, the shareholders. And that is one of the reasons why we invest in the capital market. We are looking for profitable avenue to put our hard-earned investment, our hard-earned money in the market, and looking at companies that sometimes we call them dividend aristocrats, meaning that every now and then, regularly they have good history of consistent dividend payments. And first of all, what that does to you is that it maximizes your return, because claiming your dividend, getting your dividend as and when due ensures that your return is magnified. You have invested a certain sum of money, and when the company pays dividend or consistently, of course, you also enjoy the reward of your investment. And of course, it is when you get your dividend as and when due, it also helps you to minimize risk. It is a form of risk management tactic. And what do I mean? Some investors, not all investors are traders. We have different categories or specification of investors in the market. Some are traders. They buy and sell shares every now and then. But not everybody does that. Some are passive investors, or they are not regular traders. They buy into companies that declare dividends regularly, and they keep such investment over a period of time. So they are not bothered by the volatilities in the equities market. They don't watch the market every day. And of course, you know what that means. It could give you IBP when prices go up or come down. But some investors, they are not ready for that. What they do, they put their money for the raining day. And of course, they also select where they invest their hard-earned money. And of course, the reward for that is that they look for companies that pay dividend regularly, consistently over the year. And that dividend to them, when they claim their dividend, their focus is that when they get their dividend, when the company so declare the dividend, of course, they are not bothered about the volatility in the equities market. That's another advantage to you. Of course, the income stream from dividend, cash dividend declared by the company also helps you. It helps your cash flow, and it also helps you in cash flow management or planning your cash flow very well. Certain companies you know very well by a certain period of the year. For instance, for the companies that declare half-year dividend, we have a few of those companies on the exchange. By July, August, they declare their interim dividend. And of course, so you can time your investment and you can plan your cash flow, and that helps you to manage your income stream. That's one of the advantages of a dividend to you as an investor. Of course, when companies pay dividend regularly, you know what that means? It also helps your portfolio to grow. So with dividend payment, there is portfolio growth for you. So dividend, when you invest in companies that are consistent dividend payer, it helps your portfolio to increase over the period. And that is one of the reasons why you save money. You want to preserve your capital, of course, for the raining day. And last but not the least, it also helps investors' engagement in terms of ensuring that your financial assets, you monitor your portfolio from time to time and ensure that you do not leave any money on the table, as I said earlier on. Let me paint a scenario, a practical experience, a situation of why unclaimed dividend does a damage to you as an investor. And of course, why it helps you to magnify your portfolio in terms of growth. Look at a case of two investors, Mr. A and Mrs. B. Mr. A invested 3 million naira in his portfolio at the beginning of the year. And of course, market is quite interesting. Market is profitable. In terms of capital appreciation, the entire portfolio has grown by 1 million, meaning that the valuation of the portfolio as we speak, as of November today, for instance, is 1 million naira. Meanwhile, this investor has unclaimed dividend of 500,000 naira. So, to this investor, what Mr. A has earned on the portfolio is going to calculate the entry value, which is 3 million naira, and the portfolio value as of today, which is 4 million naira. And he would say that his portfolio has gained 33% in terms of capital appreciation, percentage return. And that is quite interesting. You will say that he has done so well. But look at the other investor, Mrs. B, who has invested the same amount of money, 3 million naira, at the initial stage. And the portfolio has appreciated by 1 million naira. But of course, he's a smarter investor. She has claimed a dividend. She has collected dividend of 500,000 naira, which the companies she invested in, they have declared. And that, if you now come to compute our own return, our total portfolio as at date is the portfolio valuation of 4 million naira plus the cash she has collected. She has collected 500,000 naira. That makes our total portfolio value be 4.5 million naira. And if she wants to compute her own percentage return over the period, the portfolio has returned 50%. So you could see that Mrs. B has performed better because she has not left any money on the table relative to Mr. A, who has left 500,000 naira with the registrars and the companies that he has not collected. So who is smarter? Definitely the answer is Mrs. B, as we all know. And that is a typical example of why the damage unclaimed dividend does to your investment portfolio, or the advantage of ensuring that you claim your dividend as and when due, when the payment is due. Furthermore, of course, as I said earlier on, if you do not claim your dividend when it is due, your total return is taking a hit, meaning that your total return, because when you are computing what is the total return on your portfolio, is a combination of your capital appreciation as well as the dividend that the company have declared. If you add the two together, that is the total return. But if you do not collect or claim your dividend, your total return is diminished compared to Mrs. B, who has claimed a dividend. She has a magnified total return. And of course, you're also lagging behind the benchmark in terms of if you are benchmarking your portfolio performance to another asset class, you will be underperforming, so to speak. And the last one is that there is a loss of opportunity. Mrs. B, who has claimed a dividend, that as I went due, she could have brought back 500,000 naira as a form of reinvestment in that portfolio. She would have made more money, or she could have used that money for another investment opportunities, or to cater to another expense or another need of ours relative to Mr. B, who has left money on the table. That tells you that unclaimed dividend does a lot of damage to your portfolio. Then talking about what are the likely reasons why dividends are unclaimed? Of course, we know investors, this is the first is natural cause. If somebody dies and such an investor has not perfected data or details with registrars, it may mean that he will not be able to collect his dividend because he is now deceased. And the registrars do not have his details in their books. That means that such a person wouldn't be able to collect a dividend declared by the companies he or she has invested in over the period. So the death of investors also contributes to a huge figure of unclaimed dividend of 190 billion naira as our 2023 by SEC that we saw earlier on. unclear identity or name change, if there's a name change, or if your identity isn't clear in the record of the registrars, of course, it will be difficult for the registrars to pay such dividend. You have to ensure that such unclear identity is rectified. So you have to rectify the unclear identity to ensure that the dividend is paid to the owner of the dividend, to avoid the incidence of fraud in the market. Then, of course, there is also lack of awareness. When you buy shares in the market, some do not provide adequate information, or we also have what we call legacy issues in the market. Proud to now, before the effort of Security and Exchange Commission, SEC, as well as the NGX group, there are a lot of investors that were in the market and they did not have bank details with their registrars and all that. That contributes to the incidence of unclaimed dividend we have in the market. Of course, we have what we call inactive account or dormant account, which is similar to lack of awareness I mentioned earlier on. I must also say that there is a lot of bureaucracy in the capital market ecosystem. We have a long turnaround time to process your dividend. You go to the bank or you go through the registrars and all that. A lot of shareholders or investors, they have expressed dissatisfaction with the timeline it takes to process their dividend. That is also part of what has contributed to the huge figure we have seen in the unclaimed dividend. Even though a lot has been done, is still being done, and things are changing, is improving. Registrars are also updating their record and they are automating their processes to ensure that the turnaround time in processing the dividend is reduced to the barest minimum. And last but not the least, is one of the reasons why registrars are also very careful in mandating, in processing unclaimed dividend, is because of the incidence of fraud. The fraudsters in the market, they take other people's identity and they wanted to claim what is not theirs. And so registrars, as well as the banks and other participants in the ecosystem, they put in place stringent measures to ensure that, to prevent the incidence of what we call conversion, meaning that what belongs to Mrs. B doesn't go to Mr. A, because some people, that is what they practically do in the market. They want to convert what isn't theirs to theirs by the way of fraudulent activities and all that. So, but a market has a mechanism to ensure that does not happen. Yeah, there are a lot of terminologies that investors also find difficult, and that also contributes to lack of awareness or the level of awareness we have in the market. When a company, there's what we call corporate action. When the company declares dividend, certain dates are very important. The first of the dates is what we call qualification date. What does a qualification date mean? It is the date an investor must have the shares in his or her portfolio for him or her to qualify to be eligible for dividend when it is declared. So qualification date is your name. Do you have the shares as at the qualification date? If you do, then you are qualified for dividend. The second one is the declaration date. Declaration date is the date it is announced the interim or final dividend by the company is announced in the market. Usually you have such date pasted, or it is always on the website of the Nigerian Exchange Limited, or you have it on other information channels. So that is what is the declaration date. The day the dividend is announced, the board of directors of the company, they announce that a company has declared dividend. That is the declaration date. And usually it's made known. So the declaration date is what comes first. And in the declaration date, you are going to have the date of the qualification. And the next is what we call the closure date. In the closure date is typically the cutoff date that determines the legitimate investors would whose name is on the register of the company. So when a company says they declare the dividend on 1st of December, for instance, they'll put the qualification date there. that if your name is on the register of the company by this particular date, you are qualified. And they would announce that by so day is the closure date. That date it determines who is going to receive dividend. If your name if you don't hold the shares by the closure date, you are not going to be entitled to dividend. Typically, it is the cutoff date to determine who the investors in that particular company that are holding the shares. That date is very important to the registrars. That is when they draw a cutoff for investors who are eligible to dividend. Such a date is always included in the declaration date. If a company declares dividend today, November 8th, you would have the qualification date there. You are going to have the closure date there. And they would also include another date, which is the payment date. What is the payment date? It is the date, a particular date the shareholders are expected to receive their dividend, provided you are eligible. Your name is on the register of the shareholders of the company. So those 4 dates are very important: the declaration date, the qualification date, the closure date, as well as the payment date. Payment date is when the day you are going to receive the cash dividend in your bank account. And of course, what is a dividend yield? When you benchmark performance of your portfolio to other investment options, you will look at what is the price of the share today. If a stock is trading at 10 naira, and that particular company has declared 1 naira as dividend, so the dividend yield is 10%. 1 naira over 10 naira. You will compare the dividend declared to the share price of the company as at that particular date. That is the dividend yield. And you compare if a company dividend yield is 10%, and if you put your money in fixed deposit, you are getting 3 or 4%. Which one is better? Definitely the dividend yield of 10% is a fantastic performance, and you would go for a company with high dividend yield. And I must also mention the ex-dividend date. When a company declares dividend on the payment date on the exchange, the company will be adjusted, because when they pay cash to you as an investor, if a company is trading at 10 naira and declares 1 naira as dividend, on the payment date, on the ex-dividend date rather, the ex-dividend date, at the exchange is going to adjust the price of the share on the exchange for the dividend declared. If the dividend declared is 1 naira, 1 naira will be removed from the share price of 10 naira. So the ex-dividend date, that is the date after the share price is adjusted for 1 naira dividend declared. Subsequently, the share price is adjusted. That is the ex-dividend date for the stock. Yes, these are the terminologies used in the market. Then, of course, we now look at the parties involved and their responsibility. Quickly, I will take. There are about four or five parties involved in the process. When a dividend is declared, who declares dividend? It is the company that declares dividend. When a company declares dividend, of course, the shareholders are also when the dividend is declared, as an investor, you are also meant to, when you are opening an account with your broker, you are meant to fill what we call e-mandate form, because there is no dividend warrant, physical warrant again. In that e-mandate form, of course, you put your details there. Or when you are being onboarded by your stockbroker, you have provided your bank details and every other thing. They provide the same details to CSCS. And the registrars, there is a handshake between the registrars and the CSCS so that they can get your data. The registrars will get your data from the CSCS. That takes me to number 3, which is the submission. So the handshake between the stockbroker, the shareholder submits bank details to the stockbroker, and the stockbroker gets that information to the CSCS or to the registrars. And from there, the e-dividend mandate form you have filled, the registrars send such a form to the bank to upload on the portal to verify that the information you have provided is your information. And once that verification is concluded, then you get your dividend. That is the process involved in claiming your dividend outstanding. It's quite, straightforward. However, sometimes if you do not fill the form properly or you do not provide adequate information, that can cause delay in claiming your dividend. And I said for those that have unclaimed dividend, I said earlier on that SEC, Security and Exchange Commission, has done a lot, has committed resources, both financial and non-financial, in ensuring that that 190 billion naira we currently see, it comes to the barest minimum in terms of investors' education and other forms of support to ensure that we clear the backlog of unclaimed dividend and we reduce the incidents going forward. And one of the steps that Security and Exchange Commission has put in place is there's a portal where you can search, what we call a search. Go to the portal, sec.gov.ng is available, not mandated. Go there, and once you get to the data, the portal, you can do a search, put your name and details. It will show you where you are having unclaimed dividend, the company, as well as the registrar. You can download the form on that portal and you fill the form. Once you fill the form, you can submit the form to your bank or submit the form to your broker, or you go directly to the registrars and submit the form. Either any of the three approach options that you take, it's fine. They would process the form for you, and that means it takes within 2 weeks or thereabouts, your account is mandated, and subsequently you continue to receive your dividend automatically in your bank account, and there won't be any incidents of unclaimed dividend again. This is the portal that the SEC has created. It still works. It works so well. If you go there now, you can get that information done. For us as a broker, we also assist. I made mention that registrars assist. Your broker can as well assist you. Go to your broker. For instance, for those of us, for investors that have, for our clients, you go to our portal, merittrade.com, www.merittrade.com. You go there and provide information that you have. What we do, we conduct what we call a global search for you. Even if you do not know where you have unclaimed dividend, you aren't sure, there's a process to that. We can take you through that process. We search for your unclaimed dividend, and once we search, we provide you with requisite information and forms to fill. Then we help you process the form with the registrars, and subsequently, your account is mandated. And going forward, you'll be receiving your dividend electronically without any hitches going forward. And that is part of the support we have also put in place to ensure that the incidence of unclaimed dividend is reduced to the barest minimum in the market. As I've said, you are leaving a lot of money on the table by not claiming your dividend. And of course, Security and Exchange Commission, SEC, as well as the NGX, they have put in place part of the investors' education is this session we are currently having now, to ensure that we educate investors and we ensure that participation in the market. One of the reasons why some do not participate is because they are disgruntled. They have huge unclaimed dividend in the hands of the company that have declared such dividend. This is an opportunity for you to come back to the market and renew your courage. There are lots of investment opportunities that you can put your money in, and you can grow your portfolio and ensure that you add value to yourself and you move up the ladder of wealth. Thank you so much for listening.
Thank you very much, Said, for the very comprehensive presentation. If you were not enlightened, I'm sure by now you are. You know what it takes to get access to those unclaimed dividends, which unfortunately have been piling up over the years. But clearly, the authorities in the market have put in some efforts to ensure that we can access that as easily and as quickly as possible. So please take advantage of those platforms that Said has presented in his presentation. Thank you so much, Said, for that. All right, as we move further in this conversation today, I would like us to now move on to our panel conversation. And this gives us ample opportunity to really delve into the big issues relating to retail investors in the market today. So the conversation is on retail investing in the Nigerian capital market. And I'd like to introduce the panelists right now, starting with Alhaji Kasimi Garba Kofi, who is the CEO of APT Securities. Thank you so much, Mr. Kofi, for joining us. We also have Mr. Peter Omorege, the CEO of Cardinal Stone Securities. We have Mrs. Onome Komolafe, Divisional Head of Business Services and Client Experience at the CSES, and also providing some perspective from NGX regulation. We have Mr. Abimbola Babalola, Head Market Surveillance and Investigations at NGX regulation. And to moderate this session, I'm delighted to introduce Mr. Femi Shobanjo, who is the Head Broker-Dealer Regulation at NGX Redco. And on that note, I will hand over to Mr. Shobanjo to moderate this session. Again, I want to remind everyone, please, as we continue, feel free, and I can see that we are already doing that, to type in your questions and comments. And shortly after this panel session, we'll hopefully get to them and provide some answers. Thank you very much, and it's over to you, Femi.
Thank you very much. Good afternoon, distinguished ladies and gentlemen. It is a pleasure to be here. Just a very quick introduction before I shoot questions to the panelists. Financial markets are changing, very dynamic. Every day, the influence of retail investors, now more than ever, is enormous. Nigeria is interconnected with the rest of the world. We've witnessed profound transformation in terms of how individuals engage with the capital market to secure the financial future. From digitization of trading platforms to far-reaching impact of social media, easy access to information, investment knowledge. These developments are now accompanied by a set of challenges and shared responsibility that extends to all stakeholders. This is including regulators, market operators, and of course, investors themselves, who we call the most important market stakeholders. So this session today essentially is not just a conversation, but it's an exploration of the entire life cycle of retail investing. It doesn't focus solely on just the how of investment, but we hope to address vital aspects that follow. To begin, we'll ask questions like, how can you as a retail investor embark on this rewarding journey? What pathways and best practices lead the way as you begin your investment voyage? Noting that the journey doesn't just end upon entry, it persists. How can you monitor your investments? What sort of tools and strategies do you have to empower you to ensure that your decisions are well informed and aligned with your financial goals? We always say that an informed investor is an empowered investor. In delving into these questions, we must not overlook the fact that the investor's path is rarely without hurdles. They need to be informed on what to do when these obstacles arise unexpectedly is extremely critical. Are there established processes and procedures in place to guide you through these unforeseen twists in your investment journey? The future of retail investment in Nigeria is being shaped as we convene. As the presenters have already shown, the space is growing, and of course, there's still a lot of room to grow. So we hope to offer you with invaluable insights and actionable strategies for you to understand the current state of retail investing in the Nigerian capital market. Having said that, let me take my questions to the panelists, to the speakers, starting with Mr. Omorege. Good afternoon, sir. For someone who is new to investing, and we can see that we've seen a lot of questions in the chat box already. So for someone that's new to investing, perhaps a young graduate or a young professional with disposable income, where can they actually access reliable information about the Nigerian capital market? And how would you guide or advise such individual to start investing? And of course, in that, can you please shed some light around how do you then open accounts within the market? What is the role of mobile applications, online trading portals, etc.? Thank you, sir.
Okay, thank you, Femi. Thanks for having me. I'll say, first of all, for a young or new investor, first thing would be to set clear financial goals. And also understand that investing is a journey. It's not a short term, this is not something you get into and think of, getting the rewards immediately. Investing is a journey. We always advise long term. So have a long term focus in mind. So by long term, I mean up to 5 to 10 years, that is long term these days. So 5 to 10 years, have that, goal in mind. So you can also set short-term goals, but have more long-term goals in investing. So also you need to get some education, understand what is available. So today you want to invest in the capital market, you typically talk to someone and say fixed income, you say equity. So what is fixed income? You can get that basically these days. Some of the things technology has done, you go on YouTube, you just have to do some work for yourself, get some basic information about what are these fixed income instruments. Is it treasury bills? Is it bonds? Is it bills? Okay, they say equities. What are equities? And try to understand the risk involved in investing in these asset classes. So you don't go put all your rent and say, I'm investing. Your rent is due in 1 year, and unfortunately, whatever the investment is down 20%. So understand the risk involved. Then understand your own, assess your own risk tolerance. Of course, this will have to do with, what do you have available in terms of your resources to invest? What do you have available in terms of resources to invest? What kind of returns do you need to make, to either cover some cost or meet a long-term financial goal? So if part of the goal is to, by 18, I want to be able to send my kid abroad, so I start investing today. What kind of amount do I want to make, to be able to meet that goal? So these are some of the things you want to look at. For equities, you select a very good investment platform. So a stockbroking firm, look for a reputable stockbroking firm, where you can get that. First of all, is to go on the NGX, use Google, check about the firm, check about its reputation, who are the promoters of the firm, check on the NGX to make sure the firm is still active. These are some of the information that are readily available on the NGX website. Also, we also advise, in the long run, diversification, but this will be after you've spoken to an investment advisor. So you must have opened an account, with a stockbroking firm, with a reputable stockbroking firm. Then we also, advise diversification. This will protect you. This is risk management, which would always come into play, so, and you stay informed and you continue to monitor and adjust your portfolio. So, look for a reputable firm, understand your financial goals, understand risk tolerance, and, then from there, you can start investing. We'll typically advise you start small. When you start small, you begin to understand, the risk involved. Of course, you can read about it, but, you always underestimate the risk involved. You start small, but be consistent. You start small, understand the risk involved, and be consistent over time. So because you have a long-term focus in mind, the short-term fluctuation should not deter you. And that's why you need to invest in a reputable firm that is able to guide you in this investment you're making. Understand your risk tolerance, understand your goals you're trying to achieve. Then, you start small, you begin to invest. You spoke about choosing a stockbroking firm, correct?
Yeah, I want to just spend the last minute just talking about the online trading portals, mobile applications, and things like that.
Okay. So yeah, so technology has made things very seamless, easy. Investing is transformative. So what you have is firms these days have online stockbroking portals or trading platforms where you can go and invest. For example, at Cardinal, we have a Trade Alpha where you can easily and anywhere just go on the mobile app. And you can buy stock, you can sell stocks, you can use limit price, you can use market prices at your convenience, whatever amount it is. Technology has made everything seamless. So these days retail investors can practically do anything that wasn't possible some 10 years ago. Accessibility to information on the portal, accessibility to research reports. You can get research reports on the portal and trade online. Today, technology has made everything very seamless, and it's real time. Real time, you can trade, you can get information on trading portals these days, with reputable stockbroking firms. Yeah.
Excellent. Do you need large sums of money to start, or can you start with?
No, you can start, like you said, start small. You don't need large sums of money. You need to start small to understand what you're getting into. Start small, but be consistent, over time. You don't need large sums of money.
Thank you very much.
Yeah.
Mrs. Komalafe, over to you. Can you just kindly explain what is the key role of the CSCS, the Central Securities Clearing System, in the transaction process in the capital market? And maybe just touch a little bit on direct cash settlement and e-dividends as well.
Okay, thank you very much. So for us at the CSCS, I mean, as a market infrastructure, our roles are quite diverse. In terms of what we do, we are, if I'll use that term to make it very simple, I will say that we are the banks, we are the bank for the securities. So we provide depository services. So we are able to help keep your securities securely in electronic form. Since in today's market, there's no need for physical certificates. So that's one of the things that we provide to the market. Secondly, we also aid the clearing and settlement of transactions. What does that mean? When trades happen on the exchanges, we are responsible to ensure that these trades are properly settled, i.e. cash is given to whoever is expecting cash, and asset is transferred to whoever is expecting the asset, securities, bonds, whoever is expecting them. And also, we also have processes around risk management. So for example, we do collateral management services also for the market. For example, you have securities and you require a loan, we provide those services to the market in terms of placing lien and managing the process for that. In terms of direct cash settlement, that's also I would say is also one of the risk management process that we also monitor. What does that mean? It means that as an investor in the Nigerian capital markets, you can decide that you would want the proceeds from your investments, cash, to go directly to your own account and not to your broker's account. So the options are: one, you can settle through your broker's account and your broker will transfer the cash to your own account. But for direct cash settlement, which is the second option, is that you would the settlement will go directly into your account, and so there would be no need for you to pass through your broker, and then the lead time of having to wait for your broker to credit your account doesn't apply in that particular case. Now, in terms of the discussions we've been having around unclaimed dividend, yes, CSCS plays a major role. And I would say that if, for example, you have issues around unclaimed dividend, the first thing is for you to go to your broker, ensure that your broker, you have an account with your broker, and that account is reflected at CSCS, i.e. you have a CSCS account. Also ensure that you are able to get across through the broker to the registrar for that particular company's certificates that you're holding, or the transactions that you have. And then when all this is verified, you would have this dividend credited to you. Again, CSCS is the one that monitors this process, again, as a market infrastructure in that regard. I hope I've been able to cover all the points.
Thank you very much. Alhaji Perfy, as a senior stockbroker in the market, please would like to get your thoughts around what was discussed earlier about investing early, investing over a long-term horizon, why that is encouraged, and because, to demonstrate how the capital market tends to outperform other asset classes over an extended period. With that, we'd also like you to touch on why the capital market serves as a store of value against inflation. We are seeing a lot of people moving. We're seeing questions around cryptocurrency trading and all of that. And then perhaps what your thoughts would be around, is it also a hedge against devaluation of the Naira, for example? Just your thoughts as a senior broker. Thank you. Alhaji Kofi, are you there?
I am not sure why we can't hear him. Perhaps you could come back to him.
Okay, let me come back to him. I'll come to you, Mr. Babalola.
Okay, you can hear me now.
Yes, we can hear you. Did you hear my question, sir?
Yes, I hear your question.
Okay, please go ahead.
Okay, I start with the issue of the long-term investment, because generally the capital market group beyond reasonable doubt that it hedged against inflation, and the performance of the capital market in most cases is far ahead of any other instrument. Even the cryptocurrency did not perform as much as what the capital market do. Taking this year in particular, we have many stocks that have gained between 600 to 800% within this year. Take example of Transcorp. It was trading at 1 naira in January. Today, Transcorp is trading above 6 naira, a gain of over 600%. So we have many, especially the small caps and the penny stock have performed tremendously well. So we can say that over a period of time, if you are into the capital market, the performance will surpass the inflation and all other expectations will be met. Take, for instance, the case of the Nigerian breweries. Nigerian brewery came to the market in 1973. From 1973 to 2003, it gave bonuses over 12 times. And in most cases, they give 1 for 1. So if you have an investment of just 100,000 at that time, by the time of 2003, you are talking of over 36 million units. By the time you multiply it with the price, you see that you are no longer a millionaire, but rather a billionaire. And we have a similar case of NBC, Nigerian Bottling Company, even though delisted. It came to the market in 1973 and almost delisted by 2009, about 2012, thereabout. But before, anybody that invested from that time to date will see that plus the bonuses, the gains is more than 2,000%. And this is wonderful. Even take, for instance, Nestle. Nestle in the year 2000 were trading it at 10 naira. Today, Nestle is 1,000 naira. Aside the dividend, they are very generous in paying interim dividend and final dividend. So if you take a stock that is priced 10 naira in year 2000, today we are talking 23 years, and it's trading as 1,000 naira. So you can see how many times have you hedged against the inflation and what other. Remember that Nestle traded by year 2000 as high as 1,700. And we can apply it to so many other stocks. We have seen what happened to Champs. We have seen what happened to Jafol. We have seen what happened to CWG. All these stocks were penny stocks trading around 2023 kobo. Today, we are talking of CWG. It's over 8 naira. We are talking of Champs. It's over 2 naira. And the same thing with Jafol is going. So it shows you that there is no any better way to hedge against your investment than to invest in the equity. However, this knowledge is not much widespread to the young generation. If they know this, they will not go into currency. Even the poorest, they lose more money than what they make. So the capital market and the equity provide for that. Aside that one, the market is no longer one monopoly. If you look at 2008, when the market go down, almost everybody went down. Now it's no longer like that. Apart from the equity, we have bond. And under bond, we have different bond. We have Sukuk now from 1 to 6. We have FGM bond. We have federal government saving bond that issue on monthly basis. And this federal government saving bond pay you 4 times in a year. That every 3 months you will get a drop, and it's issued on monthly basis and to give you double-digit return to up 13%. So why should you take your money in the money market? At the same time, this stock is liquid. At any given time, if you don't wait for the maturity, you can come to the market and trade it. So I can say that the market has done it very well. And aside this one, we have alternative. By the year 2000, what was our total mutual fund? We are talking of 300 million. Today, we are talking of, when you look at alternative, we are talking of over 1.8 trillion, meaning that there is various products introduced in the market to your choice. Even if you want to buy fund that is managed in the hard currency, is available. Aside the other unit trusts that are there, infrastructure there, risks are there. So there is so many wide variety of products that enable the investor, a retail for that matter, to come into it and put it into your portfolio. So your portfolio will be well diversified, irrespective of what happened to the market. You will find that you will not be much affected unlike before. And secondly, when you look at our market, you will see that today, because of the technology, it makes life very much easier. I visited NYC camp, and I have seen how I introduce it, and many of them right from there, we open their line. CSS make life very easier. You can have direct access and get your CSS account within 2 hours. So you can get your account open in a day and get it trading within the day. And with the technology now, you don't need to take your money to the bank. With your ATM, you can transfer your money directly into your account and start trading online. So the technology makes life very much easier for the young generation that, look, it's very much easier. You can start trading today and you can make money today. Because of the wide gap that is given in the price exchange, the stock can lose 10% and gain 10%. So you can have a range of 20% in a day, and it happens, and it keeps on happening. And the information is more available. Exchange make information available. Even the broker who is lazy, you will find that the client will know better than him. Just go to the NGX website, go to the data, go to the corporate action, you will see the information. The information is now available to the investors as it is available to the broker. So nobody have an edge over you. You get your information, you decide. I have a client that he said he read from the exchange, this is what is going, and this is where he's going. I said, go ahead. We have investors that now use technology, trade outside Nigeria, in Germany, in Canada, and along. So we are saying that the exchange make life easier for the retail is only for we to reach out. How many brokers go to the NYC camp, introduce themselves? We need to do that. We need to do public awareness. If we do that, the sky is the limit.
Always a pleasure listening to your words of wisdom. You've said a lot of things. You've also said that a number of stocks have outperformed inflation by in multiple terms. Yes. We don't want to give the impression that the market is one that is, what they say, kalu market. So let me turn it over to Mr. Babalola, who is the head of the market surveillance and investigations at RECO. Mr. Babalola, we all call him Bablo. Market manipulation, insider trading, market abuse generally, and other unethical practices can have a detrimental effect on investors generally, not just retail, generally. As the head, and your role as the head of market surveillance, you play a very critical role in monitoring trading activities to detect such unusual and potentially manipulative behavior. Perhaps could you share your thoughts around how you police the market, what sort of tools or systems you use, and perhaps what sort of, just talk generally about investor protection. How do we protect retail investors so that we ensure that their investments are secure?
Thank you very much, Mr. Shubanjo. You will agree with me that aside from the exchange being a marketplace, we also have the mandate of protecting investors and ensuring that the market is fair, and is also transparent. So in order to achieve this, you will discover that one of the things that we try to do at the NGX regulation is to make sure that we have all our rules that are well documented. And we also take a step by even issuing interpretative guidelines so that everybody that is participating in the market understands the rules and how the market is being operated. Now, most of the things we do in the market today are also fully automated. So we also ensure that the trading engine that determines the prices has a well-detailed, well-documented algorithm so that we remove human element from this. Now, for us at NGX Regulation and in surveillance, what we'll do is to make sure that every participant in the market complies with the rules of the exchange. And we also ensure that we monitor this such that when we see individuals or any participant that wants to take undue advantage of the market, we have a way of detecting whatever these individuals are doing. And on top of the trading engine, we have our own surveillance tool, like the big brother that is watching every participant and is watching every security that is being traded on the exchange. So in terms of some of the behaviors that we see, we label them under what we call market abuse. And it starts by looking at, are there people who wants to take undue advantage of the market using insider dealing information? Today, I can tell you, we have profile of almost all the insiders in every company, and we can see their trade and we can see their activities. We also have a surveillance tool that is using one of the best, what I would say, fourth industrial revolution technology, artificial intelligence, machine learning, to track whatever is going on. And it keeps giving us alert as to what is happening in the market. We also see instances where people want to do market manipulation. So we have alerts that are also monitoring all the various well-known market manipulation tactics that people are using, whether locally or internationally. Then we also look at customer abuse, which could be, non-executing of clients' mandate, which will come to us as a form of complaint. We look at it, and our philosophy is an injury to one is an injury to all. So once we receive a complaint, we're not only addressing that complaint, we're doing a deep dive to see how rampant is this particular behavior in that particular trading license holder's office. Then we also see, non-remittance. That is, if a client have given you issue an instrument and says sell, sometimes we see a situation whereby the trading license holders will not remit the sales proceeds. And, all these activities, we monitor them, we'll investigate them, and when we see, we take such people through our what we call disciplinary process to make sure that if they violate our rules, they pay for that. You understand? Aside from that, we also monitor identity theft. You could see, I think one of the speakers mentioned, unclaimed dividend, trust Nigerians. Some set of individuals who thought they are smart are actually trying to build, start stealing people's identity, because this involves a bit of criminal element. So we have an MOU with law enforcement agents, you understand? And if we see individuals that are trying to do this, we do not only prevent them, but we also report them to the law enforcement agent who will take them through prosecution. And I think we've had many success stories. So in terms of investors' protection, it's a major thing for us. And you can see one of them is what we're doing, because we believe through education is the easiest way through which you can empower, and protect an investor. Because if the investors know and they know what to do, they will not, fall as victim of some of these people. And let me also say this, we have many channels that we've also opened where investors complain can actually come into us. One of them is that we have the X-Whistle portal. If you know anything about the market, if you know somebody that is doing the wrong thing in the market, you can go and blow the whistle there. We'll definitely act on that. We have our ethical channels. You understand that you can also report some of these things. You can also write through normal complaint letter to us, either to BDR, to market surveillance, or to our contact center. We will definitely take this thing through the normal process. Now, how do we restitute, you understand, the investors? By the time we receive some of these complaints, we'll investigate it. If it is something, because there's an agreed complaint management process that SEC, a framework that SEC approved for the capital market, we'll run it through that process, getting the stockbroker to resolve the problem. If they cannot, then we'll call for all parties meeting. In the all parties meeting, decisions are made. If the decision is that the broker should restitute, you understand, they will definitely do it within a specified time frame. But if not, if it is not a problem that is too, that maybe something that leads to fraud, that maybe the broker is no longer there, then we'll have to make a recourse to what we call the Investors Protection Fund. We have one. Ours is limited to fraud or activities that is done by a trading license holders. But the Security and Exchange Commission has a national one. So our focus there will be that anything that happens between you and the trading license holders is what our Investors Protection Fund covers. And let me also say this, recently we've just, increased that amount. It used to be 400,000. Now it is now 500,000. That does not deny you, in case the amount you need to recover is more than that, then, we will give you the little we can give you. Then we'll advise that you take all the necessary approach or process to make other recovery. So in terms of investors protection, we support you and make sure that you are protected.
Thank you very much. We can see that the NGX group is doing a lot to protect investors. Now, we're mindful of the time we have, and so I'll go around again with one more set of questions, and I'll give each of the speakers just about 1 minute or so. I'll start with Mrs. Komolafe. We've had a lot of feedback from investors, particularly the elderly or the older generation, saying, look, I have a lot of paper certificates and all of those things. I don't get my dividends. Can you please just tell me what do we need to do? If I have these paper certificates, where do I go? What do I do? And we have just 1 minute.
Okay, thank you. So if you have paper certificates, what you should do is take those paper certificates to any broker of your choice, any stock broker that you prefer, and the broker will give you the form to fill. It's called a migration form. Now, the idea is that it's what we call a dematerialization. It's a very long term to say that we're taking those paper certificates and going to accept them as electronic deposits. So you would complete that migration form. What that form does is to say that those paper certificates have been migrated to electronic copies. And the idea also is that you would not need those physical copies anymore. Once they are migrated, the broker would reach out to the responsible registrar, depending on what kind of assets you have in terms of the companies that you have invested in. And the registrar also would require that you verify some of these details. Mr. Babalala has spoken about identity theft. We want to be sure that you are appearing before us, the broker, CSCS, and the registrar, that you are the person that you say you are and the legitimate owner of the documents. And so once that is done and confirmed, then the registrar would advise CSCS. CSCS would also update your records with us, and you will begin to receive your dividends. So it's it looks like a long process, but it's just to make sure that there is no conversion in terms of ownership of the actual documents and the actual assets, actually. Thank you.
Thank you. Mr. Omorige, we hear it all the time, when people say the stock market is a barometer of the economy. What does that actually mean? Can you just explain that in lay terms? How is it a barometer of the economy?
Okay, so that simply means the stock market shows the performance of the economy and the expected performance, because it's a discounting mechanism. So, for example, in layman terms, the new administration came in and did reforms around FX, so the expectation, so you see the market rallied after that. The expectation was that this is one of the factors the IMF, the World Bank, everybody has been crying about. The expectation was that once this is done, or the expectation is that this has been done and we'll most likely see FDI, FPI inflows. So you saw the market rally. So the stock market will remain a barometer, which simply means shows the performance, current performance, and expected performance of the economy. So it's a reflection of what is expected in the very near term. That's what it simply means.
Thank you very much. And thank you for making it very succinct. Alaji, Turfi.
Yes.
Again, it's in the news. It's all over the news. The all-share index is at its highest level. And people are reading and calling and saying, what's going on in the stock market? Is it overheating? So what does that mean? And does that mean it's a good time to invest?
Well, obviously, in the history of the crypto market, we have never witnessed 70,000 all share index. Even during the 2008 and 2009, it was 66,000. So it shows that the market have recovered and go beyond that. And it shows that the market is very sensitive and proactive based on the statement made by the president. He means business by stimulating the exchange rate. He means business by removing the subsidies. And he is all out. For the first time, we see our president visiting NASDAQ. We see our Minister of Finance visiting the London Stock Exchange, all in attempt to bring the foreign investors to invest into Nigerian economy. And this, in response to that, the all shares index start getting ready for that. So I think that it is the true picture of what the future is likely going to do. And it shows you that the future is brighter and better for the investors. So for the investors, I advise them invest now.
Fantastic. Mr. Babu, lastly, the last question goes to you. Since your role, you're involved in investor protection, a lot of comments have come in from, people lost out in the market crash 08, 09, and they never recovered their losses. Some of them had severe tragic experiences. How do we know that that won't repeat itself again? How do we know that we won't go back to another 08, 09 situation? What measures or what reforms have we put in to prevent such a reoccurrence?
Yes, thank you very much. I think, compared to where we are now, I mean, if you compare that with 2008, like I did mention, we now have one source of truth when it comes to our rules, and those rules are well spelled out, well detailed. Today, 2008, we didn't have a surveillance department that monitors trade on a daily basis. And if you look at our disclosure requirement in terms of listings, today it is disclosure, disclosure, disclosure. There's nothing that you are seeing that is happening in the market that people are not providing information for. You see today.
Mr. Babylon, are you with us?
I think his connection, I think it's a connection problem. So perhaps we could. I think he's back now. He's back now.
Hello?
Sorry, we lost you for a second. Please go ahead.
So, like I said, I think there's a major shift in what you used to be, what the market used to be in 2008 and now. We've, like I said, we have one single source of truth when it comes to our rules, and the rules are so dynamic, the way and manner we monitor our market, and we change those rules. In fact, I think I heard somebody saying that at NGX, we make more rules even than the National Assembly, because we monitor our market, we're so dynamic, we monitor things that they are happening. Aside from that, we leverage a lot on technology. So we have surveillance department that is dedicated to monitoring of what is happening in the market. You understand? We also make sure that we've also enhanced our reporting. You see that the listed companies, it is about disclosure. You see today, I see somebody ask a question today, if an insider or a director in a company should increase his holdings by 1 unit, our rule says that person must inform the market. And that is also an information to the investing public to say somebody of interest is increasing his holdings in the market. So today, reporting, you have data points that is of what is happening in the market. So, what I would say is that if the retail investors should not just put their money in the company and go to sleep. Today, data is free. We give it to you at the close of business. You can monitor your market. You listen to most of the radio programs, because no company will collapse in a day. But please, we are just saying that we want you to be an active investor, not a passive investor. An active investor is that person that constantly monitor what is happening in their company, and they are taking decisions based on the information that is happening. But for us, what you can be rest assured is that we're monitoring insiders. You cannot manipulate market again. If you do that, we're going to get to know, and we're going to take such individual through our disciplinary process. And I must tell you, we've made success of that. The last, 2 or 3 months ago, one of the people that were trying to do identity theft in the market, we took them, they were arrested with the support of EFCC, they were taken to court and they were sentenced, to years of imprisonment. So a lot of things are happening in the market. All this is just for us to ensure that the market is fair, is transparent, and that nobody, no matter how powerful that person or individual or entity is, if you come to our market and you try to manipulate the market, we have the mechanism to detect, and we also have the willpower to take such individual or entity through our disciplinary process. And, we used to tell people and also demonstrating this to people that we are not only having rules, that we're not, we're a bulldog that can bark and we can also bite. Thank you.
Thank you very much. So we can see that a lot of investments have gone into systems and processes. And again, there's a lot of transparency. A lot of this information is disclosed. There are a number of reports on the NGX RECO website that you can look at. All right, thank you very much to all the panelists. I think everyone will be on standby for the Q&A section. So I'll hand it over back to you, Mr. Wale.
Thank you very much, Femi. Thank you so much to all our panelists for the enlightening conversation. So much has been said. And earlier, Alhaji was reflecting on the fact that the market has reached a new high. And I think that while it has done that, so much has changed since the last time the market was really revving. I'm talking about 2007, 2008. So many more checks and balances have been put in place. A lot more systems have improved, and we hope that the conversation so far has been enlightening. But I can see that we have quite a few questions, and we thank all our speakers for already chiming in and answering some of those questions in the Q&A field. But we'd like to go to some that are still outstanding. And okay, there was one I was going to pull up, but I think it has been answered by one of the speakers. Okay. Maybe a broad question that perhaps is valuable to retail investors, because the thing about retail investors is that they tend to do it by themselves, right? They maybe are guided by their stockbrokers to some extent, but at the end of the day, they are taking these decisions by themselves. So they are learning as they go along. So there's a question here by Michael. How do we mitigate against loss of investment in the stock market? How do one learn from the technicalities in the market? Peter, I guess losing is part of the game, right? But would you like to reflect on that question?
Yeah, so you said it already. Losing is part of the game. So that is why, we typically advise you doing a lot of research. If you must do it yourself, you have to put in the work. You have to, there's a lot of work. Investing is not easy, if you must do it yourself. There's a lot of work to be done. You have to read research reports. You have to understand, market fluctuations. Stock prices don't just go up. They go up and down. Once you understand that, you don't really bother about daily price movements. So you make a loss at some point. Then also, that's why we spoke earlier about risk tolerance. What kind of stocks are you buying? You buy a stock without fundamentals, somebody's pumping it or whatever it is, you're going to get burnt. So understand your risk tolerance, understand why you are investing in a certain stock. So that's why we understand, set your financial goals. Okay, I want to earn income. This is a dividend paying stock. I'll buy this one. Oh, this will grow capital wise, not capital for capital growth. So understand why you are investing. But if you follow the crowd, you will definitely lose money. You lose money and you get burnt and you probably won't come back. But it's part of it. Even for those fundamentally sound companies, there are times because of market fluctuations, you will see price movements. But if you're investing also for the long term, you wouldn't bother, especially if nothing has changed. If nothing negative has happened in the stock, nothing has changed. You ask your investment advisor, stockbroker, nothing has changed. You know you are in good hands. It's just either somebody's selling or someone who bought at better price is taking profit or something like that. So invest for the long term. Understand the risk involved. Don't buy anything that doesn't have fundamentals. And if you're speculating, understand that you must make losses at some point. Have risk management policies in place, a stop loss or whatever it is, and you'll be fine in the long run.
All right. Well, thank you so much for that. Okay, there's another question here from Annie. Skybank ran into trouble with the regulators. What can be said about the liquidity of the shares of the shareholders in Skybank? And what remedies are available for shareholders who find themselves in this situation? Mr. Kofi, I don't know if you want to speak.
Let me take it. Before I answer this, I just want to add to what Mr. Oregi said, that how to avoid loss. Whenever you make gain, invest into the fixed income. We have federal government savings that come on monthly basis. This, you hardly lose your money. So don't concentrate on equity alone. We have other product, please diversify. Coming to the Skybank, the investors should be aware that regulated banking sector entirely, what makes banks as a bank is the license issued by the CBN. Once the CBN withdraw, that license is gone. And remember your ordinary share. Because your ordinary share, you are the last. When it comes to the liquidation, you will only get something if all other claims were settled. We remember the case of Alpha Merchant Bank. Today, the investor get as much as 12 naira from 50 kobo ordinary shares. Because after liquidating the merchant bank, all the claims were able to settle and have access, so was distributed to the ordinary share. But in the case of the Skybank, this is the bank that was drawn the license by CBN, so already dead on arrival. So what happened that it no longer exists. And once the license is withdrawn, you lost your investment. That's what happened to Habib Bank, Keystone. It happened to all the other banks. So those who are in the banking industry, they should be aware. Once you see the shareholders going into negative, mind your business. So the most important that make sure that you don't concentrate on the regulated industry, because once the license is withdrawn, it's dead on arrival and you have lost it. So anybody that holds Skybank, consider it is a lost business. I don't think he can gain anything because the license has been withdrawn, the bank has been reissued another license, and therefore Skybank is no longer exists, just like Apple Bank.
Okay, thank you very much for that insight. Okay, there's a question here for Mr. Bashir, who made a presentation earlier. He says, good afternoon and thank you for the presentation. You said registrars receive clients' information from CSCS. Is this the case? Why then do we have this high volume of unclaimed dividends? I would have thought that all information, including BVN, account details of clients, were provided at onboarding and transmitted to the CSCS. So perhaps you could speak to why we're seeing those trends, Said.
Okay, if it's not there, I can add to it.
Okay, please go ahead.
You see, why we have unclaimed dividend?
Okay, I think he's... Said, are you... I told you are muted. Do you want to take it?
Let Alaji go ahead.
Okay. Please go ahead, Alaji.
We have traditional investors who have no CSS account. And these traditional investors, they have not updated their account. They don't even have, the registrar doesn't have their bank details. So because of this, the unclaimed will keep on accumulating. But for now, nobody opens CSS account without your BPN, without your bank account. With this, you don't need to even pay the e-dividend. Once you open your account, whatever stock you buy, the registrar will pay you because they have the same details. And no any CSS account is allowed to open unless the BBN and the bank account remains in the term of names and arrangement. Even if it's letter A differ, they will not open that account. So once they certify that the BBN, the bank account tally with your name, they submit it to the registrar, and the registrar doesn't need to wait for your e-dividend, you get it. So it is the old traditional investors that still accumulating their dividend, but not the new investors. As of today, you don't need the e-dividend. Once you have updated your account with the KYC, with the BBN number and the bank account with the CSS, be rest assured, every dividend declared will be paid. If there is any, let us know. But I can assure you that I have invested in several companies without e-dividend, and yet I got my alert as when due.
Okay, thank you very much for clarifying that. So it's really a case of the present and history. A lot has changed now, and so that shouldn't be happening, generally speaking. Okay, let's go. There's another question for you, Sahid. So this one also on unclaimed dividends. What is your preference from a portfolio management point of view, to have the unclaimed dividend plowed back to the company for business purposes, or have the unclaimed dividend remain in an escrow account with the SEC?
Well, for me, this is an issue of policy. So we need to go to the National Assembly.
I was actually posing that to Said.
Okay.
All right, please go ahead, Said.
That's a very basic question, and of course, I mean, it's still an issue of conversation in the market. There are conversations around, should the unclaimed dividend be returned to the company, or should it remain with SEC on escrow and all that? Of course, unclaimed dividend is the asset of the shareholders. But as I said, I mean, that was the point Alaji was about to make. Is still a conversations in the market as per who should hold unclaimed dividend. Should the dividend be returned to the company? If it does and the company is no more, what becomes of the fate of the investors in the market? If, for instance, Skybank unclaimed dividend was returned to Skybank and today Skybank is no more, what becomes of the investor? And if it is with SEC, how is it going to be administered? But of course, I think we need to wait for, we have apex regulators and other stakeholders in the capital market. Those conversations would come up. So it is not an individual decision to make. Market has to decide what to do, I think.
Okay, thank you for that. There is a question here about order flow. Someone is asking, very straightforward question. Is order flow legal in Nigeria? I wonder if any of our brokers will want to take that. Order flow.
I can take it.
Sure.
Yeah, so the market is not there yet. Order flow you see in foreign markets, so you can see where the orders are going, but our market is not there yet, so you can't really we can't really disclose order flows and all that where you can see it publicly. Yeah.
Okay, thank you for that. Someone is also reflecting on taking the market to rural areas. How do we get people in the rural areas, especially the uneducated ones, to participate in the capital market?
Okay, I will come into that. I think I said it for a number of times. It is the rule of the Security and Exchange Commission not to only regulate the market, to develop the market. And in doing that, we need to get a fund that subsidizes the broker, because I have 8 branches, but I can tell you most of the brokers, they have only Lagos and Port Harcourt, maybe Abuja. So how do you reach all these vast of 36 states? So we need to get at least a minimum of a broker per senatorial seat that will enable the existing shareholders to be able to update their account, to know where they can reach out, to know how we can do away with this unclaimed dividend, and to open the window for others to participate into the market. So I believe that there is the need to have fund that subsidize, because most of the brokers, they are not going there because there is not enough business to sustain the office. So in order to sustain the office, look at back when the federal government insists banks like UBA, First Bank, Union Bank have to offer rural branches. The CBN subsidized for them. So we need that kind of subsidy to reach out at least each Senate. We have 99 senators. So let each senator have a broker that have retail. Not only retail, he has a minimum amount to open an account. 5,000, you can open an account. Those who are demanding for 100,000, 1 million should not go there. Because most of the rural areas, they have token money. But look at it. You go to Benue State, people have Benue cement. Because they don't see it, they assume it's dead, not knowing that it's Angote cement. Go to Sokoto, go to Kebbi, people have CCNN. They don't know it's Boa cement. It's money. But because there is no awareness and no broker to assist them, you see them, they are killing this stock as if they have nothing. So across the board, we need subsidy for brokers to open branches across the board. I believe if this happens, it will help and bring more retail. And you will see more people participating into the market, and we'll see a lot of recovery. Most of this unclaimed dividend will be claimed because the people exist, only they don't know how to reach out. Most of the bankers, they don't know much about the dividend. If you go to the bank, you talk about dividend, they look at you. The right person is a broker. Not any broker will claim that doesn't know dividend. The moment you come, he will show you what to do. You go to the bankers, they say they don't know. You give them e-dividend, they keep it. Thank you.
Thank you very much.
Sorry, just to add to what Alhaji said, I think technology is also an enabler. Even in the rural areas we are talking about, they are being banked now, as Alhaji also mentioned. And I'm aware that a few brokers as well as NGX are also making efforts through digital platforms to ensure that financial inclusion is improved upon. So technology is also helping, and I'm sure very soon there are a few initiatives from NGX that would also address that concern in terms of reaching the last mile, the people in the rural areas. Thank you.
Thank you very much. We are running behind schedule here, but I want to quickly allow Onome to say a few words. But before that, a quick one for Mr. Abimbola. There's a question here about delistings. Why are major companies delisting from the NGX? I wonder if you want to give some perspective to that, because I imagine some retail investors may be, obviously one has a question about what could be responsible for that.
There is a law.
No, we wanted Mr. Abimbola to comment on that.
Maybe Alhaji want to say something.
Yes, there is an act established by Sani Abacha that allowed a foreign investor can own 99%. And because of that, that's what makes the 7 up to the list, MBC to the list, and others are just following the suit. But don't worry. We have got Dangote, we have got MTM, we have got Airtel, we have got Wasmen, we have got Wafood, we have got Gregu. These constitute more than 60% of the market capitalization. It's a free market. Comes in, goes out. I don't bother about it. As long as more are coming, those ones that are going, they may decide to come back. It's the matter of time.
Thank you for that. Barbara, do you want to add the perspective of the NGX to this?
I think, like Alhaji said, it's a free market, free entry, free exit. You understand? And you don't want to be seen to be compelling or forcing people to be listed. If not, they will come up with their own. If you force me to do something that I don't believe in, then I'll keep violating your rules. And we don't want to keep people who are grudging. If you don't see the need, because it's a business need, it's a business decision. If the companies don't see the need for them to remain listed, you understand, we will continue to market more people. And let me say this, you understand, I can tell you we have more than 500 potential companies, you understand, in our pipeline, that we're trying to market and bring them on board. So it's a gradual process, you understand, why we'll continue to engage them, because we have our principle here is to attract and retain, you understand. But if some people say they want to exit, and let me also say this, we are not closing our doors against them. If tomorrow they choose to come back, you understand, the market will definitely readmit them, you understand, and they will continue to play. So I don't think people should be so concerned. We're going into the tech board, you understand, and expecting more companies to come in that area. We're encouraging government to bring more listed companies. When they see all these things and what they can benefit from the market. They've benefited a lot from the market, and when they see that things are now right, they will definitely come back. Thank you.
Thank you for that. Onome, I want to give you the last word as we begin to wrap up. So many questions, and of course, the CSCS is really at the center of a lot of the settlement, clearing of trade. Do you want to reflect on what we've discussed so far, especially in the context of retail investors?
Thank you very much. So I think that the major discussion and the focus will be around the unclaimed dividend. I think that there are a lot of retail investors who have dividends, and if you're complaining that the economy is bad, I think it's good for you to go and look for your unclaimed dividend. We've had a lot of conversation how this can be done. Step into your broker's office, talk to your registrar for those dividends, and I think that by the time you begin to sort that out, I also saw a question about if you have a dead relative that's passed this on, go through the legal process, and you would have access to these funds, and they're just funds lying down there. Mr. Babalala has spoken about the possibility of these funds being converted. So I think that for everyone who's listening, I think that is very important. We need to reduce the level of unclaimed dividend that we have in the market. And that is the responsibility of everyone on this call. Thank you very much.
Thank you very much. And again, she is putting that responsibility on all of us to continue to develop this market and to make it a lot more pleasant and comfortable for retail investors. Many thanks to all our speakers and our panelists. And thank you also to the audience for your very, very important questions that have stimulated the conversations today. Thank you very much. And on that note, I'd like to invite to deliver some closing remarks as we begin to round up things today. Head of Rules and Adjudication at NGX RECO, Mr. Oluwatoyin Adenuba, to deliver some closing comments. It's over to you, sir.
Thank you very much, Wale. Good afternoon, ladies and gentlemen, and our esteemed participants and guests. As we draw the curtains on this insightful and empowering retail investor webinar, jointly hosted by NGX Regulation Limited and Nigerian Exchange Limited, NGX, I'm privileged to deliver the closing remarks and to express our gratitude for your active participation. Today's discussion on deepening financial inclusion in the retail investor ecosystem has been enlightening and filled with valuable information. We planned this webinar with a shared vision to explore the possibilities for enhancing retail participation in capital markets and to foster the growth of retail investors through financial inclusion. At NGX RECO, we recognize the immense contribution of retail investors to our ecosystem, and their active engagement is crucial for the sustainable growth of capital markets and Nigeria's economy at large. In the course of this webinar, we identify the existing challenges faced by retail investors and acknowledge the barriers that hinder their active participation in the market and limit their access to investment opportunities. However, we did not stop at identifying problems, as we proposed actionable solutions as well. You would also observe that a significant proportion of the questions were addressed, if not all, were addressed as well. We believe that the wealth of knowledge shared by our distinguished speakers and experts today has significantly contributed to charting the path forward. It has underscored the significance of financial inclusion, emphasized the need for investor education, highlighted the role of technology, recognized the importance of regulatory support, and stressed the need for constructive actions to enhance the retail investor experience. Not surprisingly, aside from all the recognized efforts being made locally, the theme already has international footprint as well. In March 2023, the International Organization of Securities Commissions, IOSCO, published its Retail Market Conduct Task Force final report, which emphasized IOSCO's core objectives of enhancing investor protection and promoting market integrity. The task force examined global views on emerging retail market issues. Key findings on recent retail investor trends and challenges focused on 1, impact of technological advances, social media, and changing market conditions on retail trading activity. 2, opportunities and challenges with the rise of digitalization. 3, common financial consumer issues such as amplified risk-taking, poor understanding of complex products, information asymmetries, behavioral issues and pressures in times of uncertainty, for example, COVID, as well as situational vulnerabilities, escalation in unlicensed activity, scams, fraudulent or harmful behavior, and reported investor losses, ranging from deliberate acts targeted at retail investors to those inadvertently falling foul of the law, assisted by sophisticated technology. 5, increasing greenwashing, which comes with the rapid growth of assets under management and the global interest in ESGs, environmental, social, and governance investments, and sustainable finance products. The OECD, Organization for Economic Cooperation and Development, published its policy framework for investor education in 2017. The paper focused on investor education as an important component of increasing awareness of financial institutions and markets as well. It encouraged participation, fruitful investment strategies, ensuring financial well-being for individuals and their families, analysis of levels of participation in capital markets, and the barriers preventing individuals and households from long-term investments. That framework is intended for use by national authorities as well as private stakeholders. On sustainability, we should note that some aspects of the United Nations Sustainable Development Goals, UNSDGs, also recognize the importance of our conversation today. The 8th UN SDG expects us to promote sustained, inclusive, and sustainable economic growth, full and productive employment, and decent work for all. Back home here in Nigeria, we have already been informed about the sterling efforts of the Securities and Exchange Commission and the Central Bank of Nigeria. Before we conclude, we must extend our most sincere gratitude to all those who made this event possible. Our profound appreciation goes to our esteemed hosts, moderators, speakers, and panelists. Your quality, robust contributions, knowledge, and expertise are invaluable and are well received. We also acknowledge our audience and participants. Your engagement, thoughtful questions, and presence have enriched our discussions and added color to today's proceedings. Our gratitude and highest regards go to our apex regulator, the Securities and Exchange Commission, for their unwavering support and concerted efforts in advancing the development of Nigerian capital markets. Finally, we thank the dedicated teams at NGX Reco and NGX who worked assiduously behind the scenes to ensure the success of this webinar. As we return to our various duties, let us remember that the journey towards enhancing retail investor participation and financial inclusion is ongoing and requires continuous dialogue, collaborative efforts, and steadfast commitment. Together, we can galvanize and shape a capital market that is more accessible, inclusive, and empowering for our stakeholders. We at NGX Reco trust that your valuable time was well spent with us today and expect everyone to actively participate as catalysts for change towards the growth and economic development of Nigeria. Thank you all. Thank you very much.
Many thanks, Tony, for that very comprehensive closing remark. Many thanks all around to our participants, to our speakers, to our moderator, and of course, to our presenters today. Many thanks to NGX Reco and NGX for making today's possible, and many thanks again to all our participants for their very, very valuable contributions to today's program. So I hope you've been informed. I hope this has been enlightening. I hope it has been useful. And we look forward to having you at the next event. Have a great day.